remains downbeat. Less hawkish comments from FOMC policymakers signaling that the central bank will most likely downshift to 25 basis point rate hike in the February meeting, put a floor on the gold's price and contributed to its ascent to higher ground. In this report, we aim to shed light on the catalyst driving the precious metals price, assess future outlook, and conclude with a technical analysis. Later this week, a wide array of key US economic data is anticipated by investors, which could determine whether the greenback rebounds from its 8-month lows or continues journey south. Today, traders will be paying attention to the release of the preliminary US manufacturing PMI figure for January, and according to estimates, the figure is expected to contract further from the 46.2 level recorded in the prior month to the 46.0 level. Should that be the case, we may see the USD relenting more ground and gold to find extra support. On Thursday, the market's attention is expected to shift towards the crucial preliminary quarter-on-quarter GDP estimate for Q4, and according to forecasts, the rate is expected to ease to 2.6% when compared to the previous quarter 3.2% rate. Should the actual rate meet the expectation, that would imply that the domestic growth of the US is decelerating, showcasing that the cumulative effect of the Fed's tightening efforts has started to impact adversely the US economy. That, as a result, may put extra pressure on the dollar, while on the flip side, gold could experience more inflows. On the contrary, durable goods orders for December are expected to record a rebound from the recent slump, rising from -2.1% to 2.5% according to forecasts, and may dampen the negative effect of the GDP results. The uptick in US consumer spending could be attributed to the seasonal effect observed during the festive season. Lastly, on Friday, the Fed's favorite metric for keeping track of the inflationary problem, the core PCE index, is according to estimates expected to ease to 4.4%, down from 4.7%, and should that be the case, we may see the USD face headwinds. As a result, would practically reaffirm that inflationary pressures within the US economy are abating, mirroring the CPI results reported earlier in January. Should the actual figure meet the expectation, that would intensify the Fed to opt for a smaller 25 basis point rate hike in that its February meeting next week. Hence, due to negative correlation between the greenback and the precious, we therefore expect to see the bullion being positively predisposed for further upside, since the prospect for smaller rate hikes polish the shiny metals' appeal. Recently, speakers from the Federal Open Market Committee took the stand on multiple occasions and expressed their views and opinions on how they see the central bank going forward. The committee will convene on the 1st of February and decide the magnitude of its interest rate, taking into consideration the most recent economic developments alongside the latest incoming data. Overall, comments from various speakers seem to favor a less hawkish, smaller than originally forecasted rate increase, while others stick to their guns and continue to reiterate the need for a more aggressive head-on approach. On Friday, Fed Governor Waller stated that the favors 25 basis point rate hike in the February meeting, as inflation data cooled further in December, but the policymaker underlined that there is more work to do to get rates at a sufficiently restrictive level. On the flip side, St. Louis Fed President Bullard stated last week that even though the central bank has made good progress, it must push forward with a 50 basis point and then some in order to bring rates above the 5.1% median target, obstructing inflationary pressures from becoming deeply entrenched within the economy. Currently, the market foresees that the Fed will indeed proceed with a less hawkish 25 basis point hike in the upcoming meeting. And should that be the case, we may see the odds for an extension of the bullion's rally increase. Thank you for watching.